Good morning, everyone. It's Friday, July the 17th, and welcome to 7investing Live. This is our live stream event. We host every Monday, Wednesday, and Friday at 10 a.m. Eastern Time to put a spotlight on several of the market's most innovative opportunities. 717 today. We've got a really fun show. My name is Simon Erickson, founder of 7investing. I'm joined by our executive producer, Heather Horton. And we've got a really special guest for you today. A welcome back to the show to Nick Rossolillo. He is the co-founder of Chip Stock Investor. Today, we're going to be talking about Cerebras Systems. We're going to be talking about Netflix and a little bit about Rocket Lab, a little bit of a grab bag of a bunch of different companies that have been in the news here recently. Nick, I know I speak for everybody in our audience when I say welcome back to 7 Investing Live this morning, my friend.
Hey, thanks for having me back. I'm excited about part two of the Cerebras conversation from a couple of weeks ago.
Let's jump into that one first, Nick. Cerebras has just recently IPO'd back in May. This is a company that was originally planning to go public back in 2024, had some regulatory stuff that they had to have everyone take a look at, and ultimately came probably public at an even better time here in 2026. Hits the market, is now already at more than a $40 billion market capitalization. But what this company did when it was founded, about a decade ago, was it saw that there was just a massive amount of computing that was going to be required for AI models, specifically for AI inference. And even though NVIDIA's GPUs and the parallel computing that they were doing was doing a really good job and they were very efficient at it, they saw that there was going to be potentially an issue with the memory wall, where basically the memory that was sending the information to the computing cores was not keeping up with the sheer power of those processors themselves. And so what did they do? They built a really big chip that had all of the memory embedded directly into it. Heather, hopefully we've got a quick picture of the wafer scale engine that they developed there. 4 billion transistors on that puppy, 44 gigabytes of embedded static random access memory right in the chip itself, Nick. The reason they kind of came out with this in the first place is they said, hey, GPUs are great. It's great you got all these GPU cores and they're running everything in parallel, but what if we could have a really, really big chip that could do the computing as efficiently as possible? That would make the power intensity a little bit less than what GPUs were doing. It seems like this is kind of catching on pretty nicely as AI data centers are building out so aggressively right now.
Yeah, it does. It does look like they have finally gotten some momentum. Like we talked about a couple weeks ago, having the OpenAI deal potentially be worth couple tens of billions of dollars in revenue, signing on Amazon to get those wafer scale engines in AWS. I do wonder, though, Simon, we kind of have been trained by Cerebras itself to fall back on the comparison with NVIDIA. But as we go into AI inference, the one thing I do think about, and some of the recent architectural developments that have happened around memory, is maybe the GPU is not even a good comparison anymore for this. Maybe we're now looking at custom silicon projects from the hyperscalers and just good old-fashioned CPUs, especially as AI, once it goes into production, they're figuring out ways to get it to be more efficient, consume less power, cost per token, driving that down. I do wonder if that is maybe now like the biggest competitive landscape to consider for a company like Cerebras.
I think those are some good points, Nick. And I think that even for this show, as opposed to having, a set agenda of points we want to talk about, or even ringing the marketing bell for Cerebras as a screaming buy, I feel like it's good to be maybe a little bit more free-flowing and objective and just kind of look at what's going on out there. Why does this company exist? How does it fit into the bigger picture? And then what are the risks or the competition, like you just mentioned, that it's up against? And this is a really fast-moving, space to begin with. I think that my understanding of Cerebras, of why they kind of created the company in the first place, was really fit for purpose for AI inference. When you're asking GPT a question or Claude a question or anything else like that, you are asking it to respond to your inquiries, right? You're trying to get tokens per second of output response based on a more and more complicated thing you're asking it to do. And we used to talk about, teraflops per watt, is kind of the metric we looked at before. How many trillions of floating point operations per second could you do per watt of power? It's more of now terawatts. Excuse me, it's more of tokens per second or tokens per watt of power consumed is more of the metric we're looking at now. And look at this, when you kind of see these models, um, that are just iteratively improving upon themselves, whether it be from GPT to GPT-2 to GPT-3, even 4 and 5 now. I mean, we're basically every year increasing the number of parameters in these large language models by an order of magnitude every year. GPT-1 came out in 2018. That had 117 million parameters. GPT-2 came out a year later, 2019. It had 1.5 billion parameters. And then GPT-3 in 2020, 175 billion. I mean, you can just see the step change of how complex these models are. And so when you've got that many parameters in a model, you're moving a lot of information between the memory and the processors themselves. GPUs started using this mixture of experts, kind of, the architecture of kind of, how can you offload these massive workflows into tasks and then chop them up according to the GPU cores, which worked well, right? NVIDIA did this very well. There's a reason they made so much money from it. But if we're getting to 5 trillion parameters now in GPT-5 or beyond that, at some point, this is going to be less efficient than it was when you were looking at GPT-1 with 117 million parameters. I think that Cerebras, its role in this space, in this industry, is for the most demanding workloads that need to have that heavy duty computation being done without consuming a ton of power or breaking the servers because they just simply get too hot. And that's not for everybody. Everybody doesn't need that out there. But if you're running really, really, tough stuff, really, really tough workloads, that's why you're seeing the deals with OpenAI for their data centers. That's why you saw the deal with Amazon Web Services. They're not looking to exclusively work with Cerebras, but I think that there's a reason that they fit into what's going on out there in the bigger picture. Is that a fair assessment, do you think, Nick?
Yeah, it is. Those are some good points. Those are some good points to think about with this business. And it really, I think, like you just said, Simon, it kind of illustrates how the market is really getting disaggregated when we move from talking about AI training, which is NVIDIA, basically just their market. Now they own that installed base. Hard to imagine that changing anytime soon. But on inference, there are so many different companies offering different solutions, and it does make me think back to NVIDIA's GPU Technology Conference, GTC. Yep. The acronym was escaping me there for a second. This last year, and Jensen talking about the trade-off between throughput and latency when doing AI inference. And so you're right. I think, Simon, some of these workloads, it really is about the latency. Some of these high-performing models, when deployed by customers, they need responses very quickly. But then there's the whole throughput part of the equation, which was what NVIDIA designed Vera Rubin for. And I think we'll see more advances in that as time goes on. So there is a trade-off there, as there often at times is with engineering decisions. And maybe that trade-off will become less over time. But maybe that's the better way to think about it. Like you just said, for Cerebras, going after those low latency workloads that customers may want with their wafer scale engines.
Yeah, like you said, the trade-off between output and speed, right? If you want output, you want just this heavy-duty memory. Maybe you're still buying that high bandwidth memory from Micron, putting it externally, using NVIDIA's GPUs to pull from it. There's certainly applications that would need that. What we're talking about for Cerebras with the embedded SDRAM or SRAM memory, is, you want to have it as quickly as possible right there next to the processing cores. So you've got an immediate response, a maximum speed in terms of tokens that you can process as quickly as possible. There's certainly a need for that too. And maybe companies can have both of these, right? It doesn't have to be this or this. Maybe it's this and this. It certainly seems like a lot of these systems that are being designed, especially Amazon, is welcoming not only their own chips, Trainium, Inferentia, the stuff they're designing in-house, but then also working with kind of external partners. I also wanted to say that as we're talking about this, Nick, that there certainly seems like there's some alliances that are kind of forming as the technology matures in this. You've seen We just saw OpenAI place what looks to be about a $10 billion order with Cerebras through the year 2028. They want to start deploying these over the next several years for their servers to run GPT off of Cerebras's wafer scale engines. We also have the new announcement from Amazon, also with Cerebras, which could be worth $20 billion or more within AWS and their own data centers. That's one alliance we're starting to see, but then you've seen kind of some other ones too out there, right? We just saw that Broadcom is now going to sell more than $20 billion of its TPUs that it designed for Google to be used by Anthropic for Claude for its own AI models. So it just kind of, you see, there's kind of everybody's working with everybody. There's a lot of frenemies out there, but you're also starting to see some of these partnerships where the big deals worth $10 billion or $20 billion are starting to come into play. Nick, what's your take on, man? This is a ton of money, man. I mean, $10 billion order, $20 billion order. I mean, those are 20 times Cerebras's total sales last year. Is this for real? Are these orders really going to come out and like stick? Do you think these are going to happen, or is this just kind of, press releases and narratives right now?
I'm of the opinion that no, the capex is for real, and we're of course going to get big tech earnings where the expectation at this point is probably rising capex expectations communicated for the second half of this year. I mean, it's already a pretty outlandish sounding number, over 800 billion, maybe more than 850 billion, at least 1 trillion next year. So when you start talking about 10 billion, 20 billion over the course of a few years, suddenly that number like looks really quite small when you consider just the hyperscalers alone spending this amount of money. It's fascinating to see. We talked about this, especially a few years ago, when investors started asking, like, where are these workloads coming from? Of course, there's the hyperscalers have their own internal workloads just to manage their own services, like Google has YouTube and Google Search, Meta's social media apps. Amazon obviously runs a lot of its own e-commerce on AWS. So they have internal workloads. Where are the external workloads coming from? And when you think about the global IT sector overall, it's well over 6 trillion in annual spending this year now. And so much of that is legacy IT. And Andy Jassy started mentioning this, I believe, in the 2025 shareholder letter. I think, if my memory isn't betraying me, talked about this point exactly, about how much of that legacy IT now that's still been holding out on upgrading and modernizing now has like that really, really good reason to finally make the jump to a more modern architecture because of AI. No, I think these deals, long story short, I think these deals are very much real. Of course, we need to see them actually happen, convert to actual revenue, because a lot of these are priced in, obviously, now in some of these valuations and these stock prices. And so now we need to see like what comes next. And also for a company like Cerebras, are they able to turn an actual profit on those sales when they do land? So I believe that no, these aren't just outlandish numbers. These are probably, it's a pretty good chance that these will actually happen.
Let's talk a little bit about the risks here, Nick. We see the opportunity. We see how Cerebras fits into the bigger picture. Certainly the spending is real, and that's great for their top line. But again, like we mentioned at the beginning of the show, this is a very fast-moving space. You better have best-in-class technical specifications if you're going to go head-to-head with NVIDIA, who's the largest company in the American market right now, at least the most valuable in the American market. It is other than competition, just being an ever-present risk. What else should investors be aware of before jumping in and backing up the truck with Cerebras right now?
Yeah, I mean, Simon, we're neither of us are unfamiliar with the funniness of having to value a company that doesn't turn a profit yet.
Yep.
And getting your entry point right can be really important with some of these companies, especially in the early years. I think that's one of the biggest risks. That's why we had chosen to just kind of sit tight and wait, see how the Cerebras IPO panned out. In this particular case, so far, the patience has paid off. I don't know if this is a bottom and we're all up from here, all in rebound mode from here. But that's always my biggest concern, especially when you have a hot IPO like this, trading at about 20x sales, maybe a little bit shy of 20x sales at the moment. What are you actually paying for is always the big question. We have a very, very imperfect little method where if we're looking at a company that doesn't yet turn a profit yet, neither on a GAAP basis or IFRS basis or free cash flow basis, maybe even EBITDA is negative as well. Just pretending like today, if the company turned a 20% free cash flow profit margin, I think that's a pretty good baseline to hold your tech businesses to. 20% free cash flow margin over time, eventually, I think is a pretty good benchmark that you would expect your young, fast-moving company to eventually achieve. But if they were turning that now today, what would they be generating in free cash flow? And what would the metric be, or what would the valuation metric look like? And then compare that to maybe other similar companies within the industry. This is one little trick that we like to use on occasion for assessing a company like Cerebras. Obviously, there's lots of pitfalls with that. It's not a perfect workaround, just using simple price to sales ratio. But I think it is better than just using price to sales ratio and comparing it to other companies in the industry, because the market's pretty good at adjusting those price to sale ratio metrics, valuation metrics, with corresponding peers within a group, and adjusting for the rate of revenue growth. So I think that's a big trick, big tricky part of investing in a company like Cerebras.
Yeah, especially for a really hot IPO that was willing to go public at a less than $10 billion valuation, assumed in 2024, and then all of a sudden comes out hot at, what was it, $50 billion on IPO day. I mean, that's a nice little bump for 2 years when you time the market when it's hot. I think there's a lot of that. There's a lot of institutional investors trying to figure that exactly what you just mentioned out, Nick, of how do you value this company? Are we putting it based on the assumption of 20% free cash flow margins? Are we doing it price to sales with comps similar to NVIDIA and AMD? And then even on the far end of the spectrum is, the venture capitalist side of this, saying, how big can this get? What does Cerebras look like in the year 2035 versus, 2026? There's a continuum. We're all going to find a different comfort level on that. It's going to be fascinating to see how that plays out. I think that the big question for me, when we're talking about the risks as we kind of wrap this up, is how quickly can Cerebras push Taiwan Semiconductor to get it capacity? Because it has right now one supplier that can make these wafer scale engines, and that's TSMC, who has, if you've noticed, got a lot of other, hands out and mouths to feed, because everyone wants them to have the lines that are available in their fabs to be making their own chips. Everyone wants to work with TSMC right now. If Cerebras is really doing $500 million of revenue last year and wants to fulfill a $20 billion order for Amazon and another $10 billion order for OpenAI, it's going to need a lot more capacity from Taiwan Semi, who, granted, is building out their own capacity very quickly. But, there's going to have to be some give and take of how quickly all of Taiwan Semi's customers can scale up their own demands for the limited supply that can come out of their fabs right now. And I think that they're going to do it, but I think there's going to be higher prices, or, there's going to be some give and take. If you want to get as much capacity as you can out of Taiwan Semi, they're figuring out who gets to drink first, being that everybody kind of wants the same thing right now. It's going to, I think, hold back Cerebras from growing as quickly as they'd like to. A good problem to have when you got more demand than you can supply. But I might be a little skeptical if they get to what their press releases and the narratives are saying, at least as quickly as they expect to. Great.
It's
okay,
so balanced. Yeah.
Yep.
Sorry.
Go ahead. Any final thoughts on that one, Nick, or even Heather, if you have any questions or thoughts about Cerebras before we kind of move on with the rest of the show here?
Nick, did you have any further comments?
No, I was just filling a blank space. Let's move on.
All good. If anyone has any questions, or please add them to the chat. I just think it's it's definitely a risky stock, but I do like to have a certain proportion of those in my portfolio personally. And anything that's kind of getting in on these data set, like the AI data centers that isn't NVIDIA, is always exciting right now. This is a weird one that I'm really interested in, but I haven't bought yet, and I'm still not sure I will or not.
Love it. Love it. Cerebras Systems, CBRS. If you want to follow along with this one, I would actually highly recommend checking out our 7investing free trial for this one. We've got a lot of content about Cerebras that we published for 7investing subscribers. You get 7 days completely free. If you go to 7investing.com/subscribe, go check out some of the stuff we've been publishing about Cerebras. We've got some really good stuff up there. Nick has done some fantastic work also, chipstockinvestor.com. If you want to follow along with the work that he and Casey are putting out there, a lot of really, really good stuff. Every time he talks, I listen because he really knows what's going on out there. Chipstockinvestor.com if you want to follow along with what he's publishing as well. Nick, let's use one of your statements you just made as a segue. You said, you got to know when the right price to get in for a stock is. It's not just that the company's doing good or the market's red hot out there. Got to figure out where's your right entry point. Rocket Lab has been a red hot stock in recent years, especially in the last year. But we've got a little bit of a pullback here. A stock that shot all the way up to $150 per share is now sitting, if I remember from where I last saw, somewhere around $70 a share here today, maybe $75, depending on what minute you click on the chart. But we did say we wanted to talk a little bit about Rocket Lab. Thoughts on the sell-off or what's going on with this? They also made a recent acquisition. What's your thoughts on this company?
Simon, I know we both covered Rocket Lab last year, like over a year ago, both of us. I think you bought, and I did not. I think we covered it in like late February, first privately, and then I think we did like a public blog and a video like in March, in the midst of like the tariff tantrum. And this is one of those times where I think there was two problems why we didn't get it. First, like we had a lot of stuff that we wanted to buy in March of 2025, and Rocket Lab just didn't quite make the cut. But the other thing was like we don't do price targets at Chip Stock Investor, but we will sometimes like kind of roughly say like based on what's baked into a stock price in terms of forward growth expectations, if it did hit a certain point, we'd hit a buy. And I think like the automated target that we put on it, we just missed it like within like cents. So the pullback is nice to see. I don't know if it's a deal though still yet, but I also haven't done a valuation on it, assuming the Iridium deal, like a pro forma valuation. Like what would it be if Rocket Lab and Iridium were one company today? I do like the Iridium proposed acquisition. We used to own Iridium from roughly 2017 through 2021, 22, something like that. Not a very exciting business anymore, but they do spin off a lot of free cash flow, a pretty stable customer base. It's low Earth orbit constellation. They do provide like some ancient, by today's standards, ancient broadband connectivity solutions, a lot with government agencies and whatnot. So there's like nice stability there that Rocket Lab will pick up. But I don't know what the pro forma valuation would look like at this moment now, kind of forcing the two together and seeing what the numbers would look like.
Yeah, Nick, we've had a long tenured history with Rocket Lab at 7investing, right? We were pounding the table for the stock at $4 a share, and that turned out pretty good. Drinks are on me, by the way, next time I see you when we talk about Rocket Lab in person. But then, it was
You
almost
got it
like
before you can you can afford drinks, Simon.
you can get whatever you want to, man. I'm okay. I can pull into the Rocket Lab bucket for funding our drink excursion. But then the other side, man, I pulled a 180. It felt weird to be like, this raging bull that was pounding the table for it. And then it's up to $150 a share and everyone's celebrating. And I feel like I was kind of like the counterbalance saying, man, this doesn't make any sense at all to me at this price. I feel like maybe don't go out and sell all your shares, but certainly don't be buying them at this kind of valuation. Now we're kind of splitting the difference. We're back to $69 a share and a $40 billion valuation, market capitalization here this morning. This is one I have done a lot of quantitative work on. I've now done an 11th iteration of a discounted cash flow, which goes all the way back to when they went public, in the SPAC IPO of 2021, just because this was one that I really wanted to get into the nitty gritty of. I don't do this for everything, but for Rocket Lab, I was willing to put in the work for it. And I came out at first when it was at $4 or $5 a share and said, I think the shares are worth around $24. And then I kind of bumped that up to 27, and then it was up to 33. And most recently, it keeps going up. My last estimate in terms of a price target for Rocket Lab is about $45 a share, which we're still not there, right? To your point, we're at $69 a share here today. There's still a delta with the expectation that Rocket Lab will continue to add incremental value, either through acquisitions like it's doing with Iridium, or just an improvement of its own operations that is ahead of schedule and beating the expectations put in the DCF out there. But it still looks like a company that's executing very well. I expect it's going to continue to have price targets, even my own, that go up because it's exceeding what people expect it to do. But on the other hand, I'm still not screaming to go out and put a ton of money into this because it still was such a premium before. It still seems like it's a premium at today. I don't know how much value Iridium and the spectrum they bought from this is going to immediately add. It seems to me more like a long-term play. It's kind of building out its own constellations and operations. But there's nothing wrong with buying cheap spectrum out there. This is a land grab, a space grab. If you're just trying to buy a bunch of spectrum out there and out of space right now.
Yeah, absolutely. It's pretty obvious. It's like probably in response to obviously SpaceX and their constellation, but also Amazon saying that they're going to be acquiring Globalstar. Pretty similar thing. Both companies now Rocket Lab trying to jumpstart their constellations for providing broadband service. Yeah, I'm with you, Simon. I think we're like trying to be patient on this one after just missing out on the last, in hindsight, pretty amazing opportunity a little over a year ago. I did just kind of look at the numbers here really quick on my dashboard, and it is interesting. Obviously, Rocket Lab, the much bigger business, but on an EBITDA basis, Rocket Lab last 12 months reported negative 173 million, Iridium 440 million, 439 million. So if they were combined today into one business, Iridium actually pulls Rocket Lab up to EBITDA positive. And on a free cash flow basis, Rocket Lab about 315 million, negative 315 million free cash flow, Iridium positive 305. So on both of those metrics, I do like this acquisition. It essentially gets Rocket Lab up to, at least on a trailing 12-month basis, to that sustainable level. Hitting break even on a cash basis, cash operating basis is a big deal for a business. So I think that's a positive. I'm curious to see how much the market punishes this one as the acquisition gets closer.
Yep. And one final thought on Rocket Lab is that Neutron changes everything. They finally get this massive rocket on the pad. All of a sudden, it just opens up everything. Not only, like you were mentioning, it brings it to EBITDA positive. You're launching bigger rockets with bigger payloads out there, but now you're able to go after bigger contracts. Now you've got spectrum available if you want to do operations. This just literally opens the conversation for all of Rocket Lab's customers to give them more business because now they can do this and others can't. It just is going to completely change the entire business in the best way possible. We haven't seen Neutron launch yet. They keep saying that, it said it was going to be the end of 2025. Now they're saying it's going to be the end of 2026. I'm not actually in a rush. A Wall Street investor might say, bring those cash flows as soon as possible. I would rather Peter Beck get this perfect and that first launch from Neutron goes completely perfect than kind of trying to get that faster than you're ready to. There's a question from Specs Bundy here. Let's see, Heather, you want to put some questions about Rocket? There we go. Yep. Go ahead, Heather. Oh, you're on mute, I think.
Yes, I am. Does Rocket Lab's founder carry an Elon Musk type premium with investors?
I think it's even more than an Elon premium, because Elon people are scared of or worried about and don't know, what you're going to get sometimes, because he's got 7,000 projects he's working on. Sir Peter Beck is all in on Rocket Lab. He's a genius. He's used to, strap rockets onto the back of his bicycle when he was a toddler and shoot down the street. I mean, he's been his whole life meant to do this. And it's really cool to see, a guy that's willing to put on the hard hat and the gloves out there in the field and also running the financials as the CEO of the business. I think he certainly carries a premium. Thoughts on that, Nick? Any thoughts about that?
No, there's definitely, agreed, a premium there, and for good reason.
Yep. Heather, we've talked a lot about Rocket Lab. I wanted to ask if you have thoughts about this discussion here. Do you think that this is a buying opportunity with the sell-off?
I think it is. I know we found our price target to be a little lower, but it is really interesting and I do want it. And so I think it probably will be a buying opportunity for me. And then, just link for the deep dive of the valuation that you did will be in the description for everybody. And I do recommend, if you're into Rocket Lab, to go check that out.
Absolutely. And please, if you're watching us live, I see some folks here asking some questions in the public chat. Tell us what you think about Rocket Lab. Are you buying on the sell-off? Are you waiting for it to fall lower? We'd love to hear what you think about that one as well. One more story, Nick, as we conclude the show here. We wanted to talk about Netflix. Netflix has been, it seems like, a publicly traded market darling for so long, but investors perpetually are not happy, right? It just always seems like there's a sell-off because the engagement is lower than what people wanted it to be. But they just reported, I think the stock is down here today. What is your take on Netflix? Is this a buying opportunity or not?
I mean, it certainly looks like a cheap stock, but there's always the question, like, is it cheap for a reason? And the guidance, obviously, the big obvious problem for Q3, you see that revenue start to decelerate towards 10%. There is some seasonality, though, with Netflix. Still, even with its size, there are just these seasonal events when they have like releases of new series or movies that can drive these like little short periods of outsized growth. So maybe the outlook for Q4 comes in another 3 months, and everybody like takes a big sigh of relief, and we forget all about the summer 2026 bump in the road. It's just another one of those many little down moments that disappear with time as you zoom out on a chart long term. But one thing that I think does concern me, I know there's also some concerns over maybe management continuously obfuscating, maybe we could use that word, some of the metrics that we're used to seeing for Netflix with engagement. They got rid of the subscriber count last year. Now they're maybe getting rid of some more engagement metrics, and you just kind of have to take their word for it and use revenue growth as your guide as to whether or not they're telling the truth. So I think maybe there's also some concern there. But for me, the thing that makes me a little cautious on this dip, I'm not going to say I'm not interested in buying this dip, because I think I am, but I did expect to see at some point a bigger uptick in revenue growth from the advertising business. They have put a lot of work into that ad server, and by all accounts, I mean, even subjectively speaking, with my own experience and with others, the ads business seems to be doing very well. You're certainly getting ads now on Netflix, myself anyways, and I'd expect to see that help the revenue inflect higher. So I was a little surprised to see yet another quarter of deceleration. So I'm doing a little more digging on this one, but that's kind of like my early take on this. Is Netflix one that you're still watching closely, Simon? Not interested in the media business?
Tough one for me. You know, I held Netflix years ago, but I haven't really followed it very closely at all recently. It seems to me, and maybe this is ignorance on my part, but it just feels like it's not innovating. It feels like it's the same business it was 20 years ago. You get subscribers, they stick around to binge watch, and the contracts or the shows that they buy are just getting more and more expensive, and they're trying to offset that with their own shows that have hit and miss on popularity for those. I don't know. If it's decelerating growth and it's a margins game, then that's easier to model and that's easier to figure out the right price to pay for it. But I don't even know what I would do if I was Netflix to knock it out of the park and do something differently anymore.
Yeah, that's true. We're not talking about this young, fast-moving, innovative company anymore. The explosive upside is probably over. They do continue to look more and more like the companies they disrupted many years ago with each passing year. Potentially another concern. And so I guess maybe that immediately makes me think then, Simon, if I were to take a nibble, I need to start this away from like the growth portion of my portfolio to like the value portion of the portfolio. And if that's the case, buying at the right price becomes even more critical. Buying
Absolutely.
a value stock versus a growth stock that can maybe outgrow some of the growing pains that go along with being a young business.
That's a perfect way to frame it, Nick, especially since the growth stock money, the funds are going to be real critical and scrutinizing if they start seeing those growth rates slow down and decelerate. Heather, another question came in, it looked like. Still on mute, Heather.
One of these days. Sorry, I've got a loud dog at my house today. All right. Another question that y'all kind of already answered, but do you both consider Netflix to be a growth stock, or is it now a mature company with moderated returns in the future?
I'll go first and then let you have the better answer on this one, Nick, because my simple answer is no, I don't consider it a growth stock. I think this is one that you can pretty much, even if they're pulling back on some of the metrics they're reporting, you can kind of figure out what it's going to report every quarter. And at that point, it's just a price targets game. I don't think there's anything that's going to surprise anybody significantly on the upside going forward.
Agreed. I had higher hopes for the ad business, and absent some really fresh new feature to Netflix, like I know there's been talk over the years about introducing something for user created content, kind of like YouTube. I would kind of like that. I kind of like how Meta plays the copycat game as a shareholder, anyways. The opinion of the business itself may be something else entirely, but like that copycat game, even more recently with the announcement of getting into the AI development race, the AI lab race, using their data centers to help power that. You constantly have like this new thing generating really incredible outsized revenue growth, even though it's a massive business already. And Netflix doesn't seem to be all that interested in doing that, as far as I can tell. Management seems to be content. So yeah, I think it's time to just categorize it as a value business. I'm not disappointed in it yet, but like I said, I would like to see the ad business help the revenue growth reaccelerate at some point sooner than later.
Good stuff. Well, Netflix NFLX for anyone wants to follow along with that one. Again, Rocket Lab RKLB. At the beginning of the show, Cerebras Systems CBRS, if you want to follow along with any of those. Nick, before I let you get out of here, being that you are the chip stock investor, I have to ask this question. We've seen a little bit of it. This is off script, by the way. I'm putting you on the spot on this one. We've seen a lot of chip stocks kind of selling off a little bit in recent weeks here. Not only Cerebras, which just came out hot out of its own IPO, but NVIDIA, AMD, a lot of those other chip makers, Broadcom, they've kind of been having a tough couple of weeks, or at least maybe they're just not as red hot as they were earlier this year. Are you buying anything right now? Are you interested in anything right now? Do you think there's more downside to come? Or How should we approach investing in chip stocks right now today?
Yeah, these are important questions, but I will say this. We accidentally had a phrase become popular earlier this year, like stocks go up and then they go down on a short-term basis. It's just kind of random, right? And April to June, some of these companies, especially April to June, like the entire electronics manufacturing supply chain just went nuts. First half of 2026, some of these companies went up triple digit percentages. Like SanDisk went up 600% plus. Its close manufacturing partner Kioxia 500-600% in just 6 months alone. Is it really crazy to think it could pull back 30, 40 or more percent from all-time highs after a run like that? Absolutely not. I think any seasoned investor, growth investor, momentum trader, ever invested in a cyclical stock knows like this is pretty normal, par for the course. This isn't necessarily indicative of the market saying that's it. These are finished. We're betting on capital expenditures of the hyperscalers going down next year. And so we're bailing. I think this is at this point, it could change, but I think this is just normal volatility and to be expected. And it actually happened 12 months ago with Micron. I remember Casey and I did a video and we kind of said like, that was the big question with Micron. They had a great quarter. It looked like they were going to have a good second half of 2025. And we were like, I think it's just normal volatility. Memory stocks are probably going to continue hitting new all-time highs before the year is up. It's just par for the course. Unfortunately, if volatility is risk, and it is very much risk for some investors' portfolios, maybe these aren't appropriate stocks, but it is pretty normal for this to happen. At this point, I think it's normal.
Well, I think it's a
famous last words.
Oh, go ahead. Yeah, it is normal. They go up. What was it? What was the phrase? They go up, but they also go down. With the
stocks go up, stocks go down.
I'm gonna put that right back there on the back. I'll give you full credit for it too at the bottom for coining that one. It seems like exactly what's going on right now. Nick and Casey Rossolillo again, chipstockinvestor.com. I highly encourage you checking out their site. I've been a fan of theirs since day one when you guys launched this, and man, you guys found the right market to jump right into because chip stock investing has been a fantastic place to be putting money in recent years. Nick, thanks for being on the show here this morning. It was a lot of fun.
Nice joining you again, Simon. And thanks, Heather. Really good. Good to see you guys.
Fantastic. We'll follow along with this program. Again, the companies that we talked about, we might have positions in any of these, so please do your own diligence on any of the companies that we mentioned. We will be back again next week. I hope that everyone has a wonderful weekend. We'll see you.